Does it really make a difference that you have Meta now buying into this? What does it mean to have a market awaken to the possibilities of what Google has developed?
I think what's different here is before Alphabet had been selling it as part of the cloud winning formula. Come to us, you can use our cloud and you use our TPUs, which are on their 7th generation now. They've been developing these for 10 years. They've been offering them to other clients since 2018. We haven't seen them really sell them specifically to others to use within their data centers, not just Meta, but maybe banks who need to trade at high frequency. That's a clear area of edge for them. So they're starting to get this inbound. In fact, a lot of analysts, Stacey Raxton over there, we've heard also from Bernstein, we've also heard from Gil Luria saying this is kind of an obvious dimension of the business model. The question, though, is what will NVIDIA do about it? Now, we've heard before reports from The Information that OpenAI was getting very close to potentially taking TPUs from Google, Alphabet, maybe using their cloud more ever since that relationship with Microsoft got disrupted a bit. And then NVIDIA went and put $100 billion into OpenAI and said, oh, please do use our GPUs if you wouldn't like to. What is Meta going to suddenly get offered from Jensen Huang? That's my key question, because you've seen big deals with Anthropic, but Anthropic suddenly has got some more investment from NVIDIA as well. There's going to be a tussle at the top here, but be sure, Jensen Huang's been eyeing TPUs for a while, and Alphabet, this has been a winning formula. That's why Gemini 3 has been so efficient, and efficiency's everything. It's all about energy and what more they can do with it, because that's going to be the bottleneck.
Yeah, we have actually updated our circularity chart, which continues to grow and boggles the mind no matter which form you look at it in. Michael Ball, is this a problem for the whole market? I mean, so much is built on NVIDIA reigning supreme. Here's the new version, right? And you can see all of the deals that they do with other big players like AMD, like Oracle, like Microsoft, like Intel, and that those players do with them. So if NVIDIA is brought down, is it a problem for everybody?
I don't think so. And this has been the question that the market's trying to figure out, because capital so far is staying in the market. So although we've had NVIDIA now break below that 180 level, which was a key battleground and had a lot of sort of positive, negative connotations if it was below or above, the fact that Google has taken on $1 trillion and that the market is just finding a more efficient answer to the AI CapEx question. And that's what we want to see. We want to see competition. We want to see these guys have choices. We don't want the hyperscalers all bottlenecked into one choice that has backlogs growing and energy efficiency questions. We want optionality. We want capitalism to work. And that's sort of what we're seeing. And although it's violent in some ways, given the price action of the winners and losers, it is a positive development in the long run.
Okay, so if we do get, and we have, something more efficient, something more energy efficient, Caroline, is that enough? Or is this an ecosystem that's incredibly sticky? So even if there are hyperscalers and others who want to use Alphabet's chips, if they're already with NVIDIA, can they just so easily change over?
What's going to be interesting is how the development of the software works out here, because we understand that Alphabet is doing a lot to show the prowess not only of the TPU, but also the software that goes with it, and some of the ability to use software that's adjacent, not just their JAX, which is their own programming language that they've developed to go alongside TPUs, but you can use others that use different ecosystems. Look, the thing with NVIDIA is that they have CUDA, and everyone is locked in not only to the hardware that NVIDIA offers, but the entire ecosystem that NVIDIA offers. If Alphabet can start to chip away at that and show, look, with us you can have prowess the entire way through, I think there is going to be a real recognition that this is a clear alternative. But remember, the whole vertical integration story, what Google has shown so well is that it can develop incredible models because it's using its own tech stack, and then it's putting it out into the ecosystem. We're all using it. Look what Alibaba is just announcing. They too want to be a full vertically integrated company that makes their own chips, that develops the models, that offers it out on their cloud, and then offers the models as well. But also remember, this is what Amazon does. Yes, we're talking about TPUs, but Trainium is on their 3rd iteration. We understand that many people are using not only for training, but are we going to use it not just for inference, but the training of models as well? How much can Amazon start to show its competitive edge as well with its chips, not just its AWS offering?
By the way, maybe you can clear something up. I don't really understand Jensen Huang's argument that the GPUs they sell, what are we in now, Blackwell or Hopper?
Rubin, Rubin for the next one.
Right, so those are capable of many different things, right? The graphics processing units are flexible, as you may have read last night, whereas the tensor processing units are supposed to be ASICs, so they're application specific. However, if that application is AI,
machine learning,
I don't care if GPUs can show me good graphics. I want AI, right? From
and I think this is where the battleground is going to be. How much efficiency can you wring out from this hardware with the software within it? And if Jensen Huang can say, look, my GPUs have been able to accelerate your AI models, your machine learning that much faster. And by the way, I've got a chunk of change that I can continue to invest in you as a company and continue to invest in your entire ecosystem. Maybe there's the winning formula. But this is why Google has made everyone sit up straight and why analysts have become noisier and noisier as to how much this has been a winning formula for them, is that the DeepMind were able to go directly to their semiconductor team and say, look, with this, we're learning this, let's work in it together, let's understand where the efficiencies can be brought. And I really do think that the infrastructure issue is not going to be whether you eventually can lay your hands on the hardware, it's going to be whether you can do more with the grid, with the electricity. And if they can show energy efficiency at this point, that's going to be what's music to the government's ears and therefore to users' ears. But I just think this turf war is just starting. We're all going to start talking about inferential and Trainium and what Amazon's doing and what everyone else is doing in ASICs. Because remember, that's what Broadcom's been doing so well on. All these companies, Meta's designing its own chips.
Broadcom was up 12% yesterday.
OpenAI is developing its own chips. Eventually, maybe that's going to become commoditized, not just large language models.
But why didn't the market take it that way? If you said that, the NVIDIA release was a relief on that front.
Yeah, so, who knows what the market's going to do from day to day. I mean, the infrastructure trade, if you will, has been so strong for so long. It's not unusual for the market to take a breather. It just tells you that the market was expecting, really solid numbers. And, if anything, the hyperscalers just continue to raise CapEx expectations, and sometimes the market gets a little ahead of itself. But, there has been nothing that we've seen over the last couple of weeks to change our expectation of where this infrastructure build is going to go. And I think one thing that, investors also need to understand is there are natural governors here. You can only build data centers so fast. You can only get, permitting so quickly. And then if you can actually get the power to the data center shell. And so as a result, very different than the dot-com bubble, where it's really easy just to lay down fiber or put up cell towers. This is going to be really prolonged. And, in these short-lived assets like GPUs or TPUs, they don't go into the facilities and they don't get deployed until the power shell or the shell is up, the power's there, and they're ready to go, because these things are so expensive. And so the carrying costs would just be huge. So we're still in an environment where every GPU that comes off of TSMC's foundry, there are 10 people in line for it, and we are just getting started at putting these short-lived assets into data centers.
Come back, NVIDIA defending its financials in the face of pushback from short seller Michael Burry, now sending a memo to Wall Street analysts standing by its projections. Christina Partsinevelos is getting a copy of that memo and joins us now. Christina, how is NVIDIA fighting back?
Yeah, by responding and addressing Michael Burry. And this fight is actually escalating. And I say that because Burry, who is the investor who called the housing crisis, claims big technology is cooking the books by depreciating AI chips over 5 to 6 years when they really burn out in 2 to 3. By his math, that understates cost by roughly $176 billion through 2028. Depreciation is just how companies spread out the cost of equipment over its useful life. So if you say a chip lasts 6 years instead of 3, you only expense half as much each year, which makes your profits look bigger. And that's the point Burry's trying to make. NVIDIA pushed back directly, though. The chip maker sent a private memo to Wall Street analysts on the weekend that explicitly names Michael Burry and refutes several of his claims. NVIDIA says it's nothing like the accounting frauds that Burry's comparing them to. The company doesn't use special purpose entities to hide debt like Enron did. It doesn't rely on vendor financing like Lucent. And it says over 90% of its sales come from profitable hyperscalers, government, as well as enterprise customers, and this according to Bank of America. The company also pointed to its free cash flow, which hit $22 billion last quarter, up from 60% from the prior quarter. I know Michael Burry's number was different than that. But Burry fired back on X yesterday saying, quote, "I stand by my analysis and will release on my timeline. In other words, he's going to release more data, but Burry hasn't dropped those promised details. He is, however, promoting a newsletter, which is about $379 a year, by the way. Wolf Research did also review the NVIDIA memo and said NVIDIA's inventory as well as receivables look reasonable given just how fast the company continues to grow. The question, though, is whether Michael Burry can actually back up his fraud claims around NVIDIA with actual data that we have yet to see. Guys?
Yeah, I'm not sure alleging fraud is exactly what Burry's getting at. He's definitely taking issue with depreciation schedules, right?
Yes, and that was the whole 6 years versus 2 to 3 years that he's saying that these chips, their life is much shorter. But the argument against that is that Microsoft's CEO recently said that now they're able to pair older chips with newer chips, showing that they too can use older models for quite some time. You had CoreWeave say that they had their H100 chip, which is an older chip from about just a few years ago. They were able to rent out that chip at 95% of its original price of its contract, which shows that it still holds value. NVIDIA is saying that they're still selling out of even older A100 models that are at least 5 years old. So there's still demand for these older chips, which would mean that the depreciation cycle is a little bit longer.
Let's talk about the full stack, the soup to nuts aspect, and whether it is, rightfully so, that Alphabet is being anointed this kind of new up-and-coming king of the AI race.
Yeah, well, first, thanks for having me. And I think, yes, we're seeing the story right now is that the AI narrative is shifting towards Google. And it starts with the infrastructure layer. And my core thesis has always been about the vertical integration. I've written extensively about Apple and how they have been able to create an incredible moat around their business using that playbook. And Google has done the same thing, the ability to control the infrastructure, models, and applications. And Google's the only hyperscaler that really has integrated across all three. And on the infrastructure side, as your team pointed out, Google has spent a decade building out the TPUs, working with Broadcom. And, these aren't general purpose chips. They're optimized around Google's workloads, the search, YouTube, ads, and now Gemini. And so that loop is able to compound when you combine that unique proprietary data that Google has access to with the ability to train. And we're starting to see those results. So what's new and what's really shifting the market recently is the TPUs, right? And so the fact that they're seeing the ability to not only perform really well on the inference side, which is kind of running these applications, but now they're also competitive on the training side as well, which has normally been the place where the NVIDIA TPUs have dominated. And so now that we see that Meta is evaluating potentially moving to these, that's significant. Now, Dom, if you remember the last time we talked, the last time I was on the exchange and you were hosting, I spoke about the fact that we're going to enter in this hybrid era of seeing multiple chips, right? GPUs in this case, also TPUs. And so, Google has that footing. And there's one more thing that I want to point out, and it relates to what Julia just spoke about, which is the conundrum that Meta's in. And the fact is, Meta really cannot afford to be able to compete similar to Google in building out vertical infrastructure because they don't have the offering of products. So when you look at Google, it's all about capital efficiency. The best way to achieve vertical integration and still maintain these software margins that we're used to is through cash flow, not by issuing heavy leverage. And Google Alphabet is the most capital efficient of all of big tech right now. And we know that's not the case with Meta. So when you think about the entire suite, that's why there's so much excitement about Alphabet Google.
If there's a company making 80, 90% profit margins, as NVIDIA does, you should expect there to be competition to start to lower those margins. And that is what appears to be happening here. We'll see if it works. NVIDIA is a fiercely competitive company, but that's what's happening.
So cheaper, doesn't run as hot, is more productive. Therefore, a lot of folks have been asking whether there will be a real competitor to NVIDIA. Did we finally find one?
Well, I think it could be. I think there's a lot of obstacles that Google faces. Mm-hmm. The most important one by far is not actually just performance of the chip, it's the software ecosystem. Mm-hmm. So in a way that's a little bit similar to how the iPhone, Apple's iOS has this huge developer ecosystem, and all these developers, when they make mobile apps, they usually target the iPhone first because it's kind of the premier smartphone market. And Android being a close second there. There's something similar that happens with NVIDIA chips, where all the developers of machine learning models kind of use NVIDIA's software ecosystem, which is called CUDA. And that's a huge moat that NVIDIA has, possibly more significant even than just their hardware performance. So the question will be, can Google develop a similar type of ecosystem? And it's a big challenge when you consider that Google has been used to using these chips, these TPUs, almost entirely for internal applications and some things that were offered to developers, but this is mostly for them.
Because they were leasing them or renting them at some point for
yeah, they do. They rent them on their Google Cloud product, but the idea of selling them to other...
That's all new.
That's new.
So if you're Broadcom, did you just find your new reason to live? I mean, we've seen a huge run up based on a story like this in just over the past couple of days. NVIDIA is one of the only stocks in the tech sector that's lower today. Is this all adding up in your head?
To a certain extent, the market might be overreacting to this particular piece of news. We'll see, right? I think the idea, Meta is going to be using NVIDIA chips for a long time to come. And by the way, Google uses NVIDIA chips too.
I was going to say, Google is a client.
Yeah, Google is, I'm sure they're one of NVIDIA's largest customers.
And then I'm supposed to ask you again about circular investing, which do you see as misguided in this case? Not really in this case. No. I mean, look, again, are there some transactions that happen in this that seem sort of a little fishy? Yeah.
Maybe, I'm not expert in such things.
Right, sure.
I'm more of a policy person.
You're not an accountant.
Yeah, I'm not an accountant. I do have opinions about depreciation schedules, but I'm not an accountant.
Well, those depreciation schedules are a big deal for the investment community right now. And when you look at all these data centers popping up that are going to, pay a lot of money for cooling, they're going to try to harness enormous amounts of energy. Does a TPU or the next generation make all of this unnecessary? Are we going to have data centers on mothballs when the technology catches up?
I don't think so. I think that there's just an enormous amount of underlying demand for AI services. And so, I think the companies that are building these data centers are building them primarily because they have trouble meeting demand right now.
Yeah.
OpenAI, Anthropic, these companies are always talking about how limited they are on compute and how they could serve more models, better models, different kinds of products to customers, but they can't because they're compute constrained. So I think they're making a logical calculation. At the end of the day, when it comes to these sort of frontier data centers, you do need to maximize basically computations per square foot. That becomes very important. But at the same time, Google, on their most recent earnings call, Google talked about how they had very high utilization rates of the NVIDIA V100. V is in Victor from 7-8 years ago at this point. So that chip is still being used for different kinds of developer purposes. So it might not be that you use the frontier chip for everything. There's a lot of other use cases. And so I think that, the sexiest use cases of AI will probably always be on the big training and stuff like that. They'll be on the latest models, but I think there'll be uses. We'll see. We'll see if that changes. But I tend to think that the depreciation schedules that we see right now are actually reasonable.
If you own the stock, that's what you care about. I mean, you're not focused on you're focused on the AI play relative to the read-throughs for NVIDIA. And it speaks to what we're talking about. The second, third, fourth derivatives are just starting to play out across the AI revolution. I think those that call it a bubble, it's easy to call it a bubble because you don't see it in the spreadsheet. I believe this is a tech bull market. It goes on another 2 years. Look at Alphabet as another example. New York City cab driver was bearish in Alphabet to start the year. Now look, because the reality is AI is a tailwind for them. We're seeing that, even with Broadcom and, everything we're seeing on the chip side.
I mean, yesterday, the president signed an executive order for Genesis Mission. This is the big AI project that is going to harken back to, the post-World War II years of Manhattan Project here. Is there a government backstop here? Is that one more reason why you should be buying into this bull market for AI?
Yeah, and look, as we spend so much time in D.C., the reality is for the first time in 30 years, U.S. is ahead of China when it comes to tech. And when it comes to what we've seen from big tech, I think there is a government backstop, because the reality is that it's led by Godfather of AI, Jensen NVIDIA. It's led by Microsoft. It's led from what you see with OpenAI. And look, the worries about the too big to fail and some of the concerns, we are still, like we talked about, we're top of the third, maybe one out in terms of this AI game. And I think we have 2 more years left in this tech bull market. And that really continues to be the core here from all of our checks.
I just want to go back to Alphabet, as it does trade at a record high right now, and that is, how much of a game changer is Gemini 3, and how quickly is the technology changing in general in terms of winners and losers? Like, how to gauge that, how to think about that as an investor.
Yeah, because the back was against the wall for a few years. Now you're seeing a major change there from Gemini, and ultimately I think Apple, that's really going to walk down the aisle with them from a Gemini partnership. That's going to be their AI piece. And then you look what's happened on chips. You look at the sum of the parts. Look, I could argue Alphabet, you have another 80, 100 hours upside relative to the AI piece that's not factored in yet into the story.
All right, I hope you're all doing well today and staying calm in this market. As we discussed in last night's video, The Information published an article yesterday in After Hours claiming that Meta is in discussions to use Google's TPUs as soon as 2026, and also to potentially add Google TPUs to their own data centers in 2027. There's been a lot of talk online in recent months about Google preparing to offer their TPUs to customers rather than just using them for their own internal workloads at Google. And so, while I'm always hesitant to believe anything The Information reports having to do with NVIDIA-related rumors, given their track record, perhaps there is some merit to this article. Also, I'm sure many of you are aware of Google's Gemini 3, which launched recently, and that it was trained exclusively on Google TPUs rather than NVIDIA's GPUs. Jensen actually mentioned Gemini 3 on NVIDIA's recent earnings call, saying that he saw a text from Demis of Google DeepMind saying that pre-training and post-training are fully intact. Gemini took advantage of the scaling laws and received a huge jump in quality and performance. In other words, the more compute you use, the better your models become, and that is good news for NVIDIA, even though Gemini was not trained on NVIDIA hardware. I think that the selling of NVIDIA stock in light of the report from The Information is the wrong read of the situation. I view the pullback as the market reacting to a headline without fully considering the implications. Let me ask you a few questions. Is the world still compute constrained? It absolutely is. Will NVIDIA sell whatever they can produce in 2026? They most likely will. Will NVIDIA sell whatever they can produce in 2027? They most likely will. The reality is that companies today, including companies like Meta, simply cannot get enough compute. The world is severely compute constrained in the face of very strong AI demand. Let me ask you another question. Will the total addressable market grow over the next 5 years? The answer to that question is almost certainly yes. And so if the total addressable market is going to grow larger and the world continues to be compute constrained, then there's plenty of room in this market for companies like NVIDIA, AMD, Broadcom, and others to all succeed as there is such strong demand. And so again, I think selling NVIDIA on this news is the wrong read of the situation. I don't view the success of Gemini 3 or the success of Google's TPUs as a major problem for NVIDIA at this current moment. I'll briefly revisit the topic of GPUs versus custom ASICs in case someone isn't familiar with what's going on here. To give an analogy, you could think of an NVIDIA GPU as a Swiss Army knife. It's very versatile across a wide range of tasks, while at the same time, it is not the absolute best option for certain tasks. On the other hand, you could think of a custom ASIC, such as Google's TPU, like a scalpel. It's not versatile, but it is highly efficient at the specific workloads it has been optimized for. And notice that there are use cases for both. As I've said in the past, Google is a great example of a company that uses both their own custom ASICs and NVIDIA's latest systems. Even though Google uses their own TPUs for their internal workloads, they also continue to invest heavily in NVIDIA's latest systems to then offer that capacity to their cloud customers. NVIDIA systems are a great option for cloud providers because they are versatile across a wide range of tasks, allowing cloud service providers to serve a wide variety of customers. All of that to say that I don't view the success of Google's Gemini 3 or the potential for Meta to start using Google TPUs as a major deal breaker for NVIDIA. There is plenty of room in this market for multiple companies to succeed, and that will most likely be the case for some time. As I've mentioned in recent videos, I don't think that NVIDIA is overvalued here, not at all. I know some well-known short sellers have recently compared NVIDIA to Cisco in the dot-com bubble, but the two are very different from one another. At the height of the dot-com bubble, Cisco was trading at a triple-digit forward PE multiple. Today, NVIDIA is trading at a forward PE in the 20s. That is not egregious at all. That's basically a market multiple. And if NVIDIA's earnings turn out to be better than what analysts are expecting, which is usually the case, then that would mean NVIDIA is even cheaper than that. Given all the talk about GPUs versus TPUs over the last 24 hours, I want to simplify things so that we're not distracted by the noise. Think about this. NVIDIA's valuation moves higher as their earnings grow. And going back to the questions I asked earlier, will NVIDIA sell whatever they produce in 2026? Will they sell whatever they produce in 2027? Will the total addressable market continue growing as the world is compute constrained? The answer to all of those questions is almost certainly yes. And therefore, NVIDIA's earnings should continue growing at a strong clip. And if earnings continue growing at a strong clip and NVIDIA's valuation moves higher on their earnings growth, then the stock should continue to move higher as well. I don't know what the stock will do in the short term, and we should always be prepared for potential pullbacks. But from a long-term perspective, I seriously think that NVIDIA still has plenty of runway ahead of it. I don't think it's overvalued here. And I don't view the TPU situation as a major deal breaker for NVIDIA at all. Looking ahead, NVIDIA is set to present at the UBS Global Technology and AI Conference on December 2nd at 6:35 a.m. Pacific, 9:35 a.m. Eastern. This event will likely have an impact on how NVIDIA trades in the short term, given that the event is geared toward the financial community. I continue to think that most analysts are underestimating NVIDIA's long-term growth. Of course, I expect NVIDIA's data center business to continue growing strong as the world is compute constrained in the face of very strong AI demand. I also think that most analysts are not adequately factoring in growth from some of NVIDIA's other business segments into their long-term estimates, especially physical AI. There's a reason why I keep talking about NVIDIA's physical AI business, and NVIDIA CFO nailed it on the earnings call when she said that physical AI addresses, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention, but I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.